Okay, so let's see. We'll get started here. I think the YouTube is working correctly. Okay, yeah. Okay, we got sound and vision over on YouTube as well. So it's being recorded, guys, for your feedback for later. If you want to review it as we go through various students or members in the Bookmap Academy here. All right. So anyway, welcome. Every Thursday, 4 p.m. We do this meeting. At least this is the goal for 2024. And the goal here in the Bookmap Academy is to give you guys feedback on your journaling. It's got a mentorship program in here. It is completely free. You just need Bookmap and you just need to join the program. It's very, very simple. Just go to bookmap.com, click on the More button here, and then go to under Community, Bookmap Academy here. Okay, and you can read about it in here and the steps, what we offer. It's first thing you do is, well, you'll click on the button up here, apply. It just scrolls you down the page. You'll need to input your email and name as well as your Discord. This is really important. You need that. All the communication is done via Discord in our Discord channel, so we need your Discord name. So once you've applied, then what you'll do is you'll jump over into the applicants, Bookmap applicants channel, and you ask for your spreadsheet, and we'll give it to you. We'll send it to you. That's where you'll journal your trading. And then we'll take a look at it. And if you guys continue to journal and meet the threshold of just one per day, as well as it being high quality, that's it. You'll be invited to the Bookmap Academy, our Junior Academy, and then that's the proving ground for you to create this for about a month. If you can do that for a month, we will give you Bookmap for free. All right, we will also, if you double your quota, so we're just talking 2 images per day, we'll give you the MBO bundle as well. Okay, so a lot of you have already made it, and some of you are on the cusp. So I would really encourage you to push through, and you're doing this work anyway. So keep your spreadsheet open in a tab on your browser and just copy and paste. It's really simple, and put a date on it. That's it. And if you meet those thresholds, we want to give you Bookmap, and then you'll need to continue on doing that to meet the threshold and get Bookmap. You can become a coach. Basically, at that point, you really know what you're looking at and what you're trading. You've made it up to the coaching level. You can turn around and help back into the Bookmap Junior Academy. You can take it further as well and become a Bookmap streamer. So basically, if I keep on using the analogy in here, this is like a farm club of a baseball team. We're building traders in here. We have this pathway. It's up to you if you want to take the opportunity and go for it. All right. So anyway, one of the things in here too, we extended the Market Pulse, so you can get Market Pulse free for Bookmap Academy members until a further date. It was the end of July, end of January, but we extended it now. All right. So anyway, we'll go over the other coaches' feedback in just a minute here. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so we're going to turn it over to Stan, and he's going to go through his Bookmap students here. So just a minute here, and I will stop sharing my screen. Okay, and Stan, you can start sharing yours. Are you there, Stan? There we go. Okay.
I don't know if it's working.
Yes, looks great.
All right. So yeah, I will start with so Daniel 1811 94. So he made a quick description about what he was looking for. So he clearly recognized that he was um, in a uptrend for his higher time frame. Then, sorry, still trying to catch how this works. What will happen after?
You can click on that to enlarge it.
So he wasn't against the big money, as he said. So it's clearly good to have like higher time frame structure. It was good to recognize like the theory with making lower low and lower highs, and then break structure with making high highs. And the strongness of the move, like how we could clearly highlight it, like steep move, we have like big dots. And I was wondering if potentially here wasn't looking better with this liquidity after this move to potentially go higher. Um, but overall, yeah, great confluences and great trades. So I don't know if you have anything to say.
I really like this example for a number of reasons. First off, the higher time frame, just like you covered, the higher time frame, and then you're you can even look at that higher time frame and you're inside the value area, and then now we have a move down, pretty strong move down, but right into high liquidity. I mean, right into it. And look at the reaction to that is buyers. So it comes back up and retests where those sellers really moved it lower. We get a low volume pullback where he's saying it's kind of spoofing there also in the order book. And then we have a ton more buying coming in. So a really nice example of the higher time frame and then order flow as well.
Yeah, and maybe adding more confluences with the relative volume. That can be very helpful.
Yeah, yeah. In hindsight, look how beautiful it is. I mean, you would be able to see it from that first leg, but in hindsight, look at how it's just strong selling, and then strong buying uh, on the bars in the bottom there. Yeah, and then like you said, there it is in front of you. Like you got the flag pattern there, and you've got higher liquidity at a higher level, or high liquidity at a higher level on the bid after all of that buying. So looking good for retesting some of those previous swings on the left hand side.
Yeah. No, but overall, that was a good one.
Yeah, yeah. Let's see here. Can we turn the mic on? Or see, this is Daniel. All right, let's take a quick look. I don't know if you're in here, Daniel. To access this. Okay. Okay, Daniel, I don't see you in here. Maybe you can raise your hand, but yeah. So CMJ, nice you made it in. Um, all right. No, I guess we'll move on, Stan, to the next one.
Okay. So yeah, next one will be BB Trader. So he was looking at 6B, and yeah, that was a great one. I mean, it would be good to have like a higher time frame, and it was clearly a counter trend. Like so to have a higher time frame analysis. So he was using I don't know if it's this SMC or anything like that to understand structure, but still. So we have now our context, and it would be good to, yeah, still highlight more how liquidity shift. Yeah, sorry. How here and then clearly flipped, and how it can help you to give you confidence in your trade. Like you clearly recognize like your sell stop and with potential like clearly buyers, and then sellers came back without any bias over there. It would be good to have more insight on what happened in the order flow over there. And yeah, I really like the relative volume. So
Stan, can you point to those areas that you're speaking of? I can't see what you meant.
can you hear me?
Yeah, you keep cutting out. So it's kind of on and off. Um, but maybe there's a like point. I see the high liquidity at 127.44, and you were talking about that. But
Yeah.
maybe there's some the I can't. Yeah, some of the other areas you were mentioning, um, I can't really see on the screen, or maybe you can point to them.
Okay. So yeah, I mean like so yeah, the book clearly flipped here, and this liquidity can give you an advantage, and it will be good to highlight it. Then recognize like potentially or your trap bias or here like the potential, and we can find any bias over there.
Yeah, yeah, nice, nice. Let me let's see if uh, can see if
It keep cutting.
yeah, a bit. It's kind of hard to follow. But let's take a look and see if B Trader is in here. I don't see. Anyway, guys, get ready for the mic if you can. Um, but yeah, don't see him in here. Uh, so yeah, we'll move on to your next one then, Stan. Stan, are you there?
So it is for truth 94 28. So I find great like the fact that you are highlighting, you make a quick summary of what is about for today. Yeah, and same, like taking advantage of the liquidity, try to highlight it and understand what is happening in the market, trying to highlight more potentially like your exhaustion. Like here, you could clearly see like the conviction of the buyers clearly shift over here. Then you clearly recognize actually, and here you were looking for you saw your beer flag. Um, and I think what would be good for your big flag, it maybe have more short-term liquidity to give you really this edge and potentially like take your liquidity or the previous low. But yeah, you you made a good one. Yeah, that was a good one. And maybe highlight where you would take part of potentially your stop and know how it works.
Um,
I don't you have anything to say.
okay. Stan, I'm so sorry. Your internet connection is really kind of cutting in and out quite a bit. Anyway, I just had a few comments. This was Trout is he's been with us now for a couple weeks or so, I think, and very similar to the previous images I recall. So you're trading from the inside out by looking at your POC up there, and you can see like how I see a few buys over there on the left hand side, or no, I'm sorry, it looks like your sells and then you covered and then maybe uh, yeah, I'm not really sure what is actually going on there, but uh, so just a comment, like I don't know, from my experience at least, is trading from the inside out is can be really you can get some really huge moves, but it needs to tell you something, or at least for me. If I can start to understand really the significance, like where the buyers or sellers are coming in, to move it away from there. And you do note it here. You've got you've got your trend line there, and let me turn on the uh, volume or the Trout. I think you're in here. So, and if you are, I can give you. There you are. I can give you the mic.
Yeah, I can hear you.
Okay, great. So the just it seems like this seems to be your style from the trading kind of inside out, and you do have your kind of trend line there, and no interest in going higher. Uh, it's kind of an odd one because it did make it through POC, but like you said, there's no interest there. But there's quite a bit of buying down on the swing, just previous there. And then the sellers do come in and move it away, but it is on pretty low volume until it's moved away. So there's just I don't know. Is your setup? To me, it just looks like there's some risk in there, not knowing which way it might go. If there is enough volume to trade it from the inside out.
Yeah, that particular one did have a little bit more risk, I felt, to it. The screenshot of the actual chart, there were more trades to the left, but the actual chart picture there is a better representation of kind of what I was seeing. That had a better setup that I should have probably taken better entries on that actual chart as opposed to what I did to the left. So I'm trying to refine what I see and then actually execute that. So I guess I'm more of a newbie when it comes to integrating not only candlesticks and bookmap and executions. So I'm trying to put it all together, and sometimes it feels like I get it, and then the next time I'm not quite there, and then the next time I should have waited for a better setup.
Yeah. I mean, like Stan was saying about the liquidity, and how, I mean, just a few comments here. There's high liquidity up here. Oops. I don't know if you guys can see my screen. I'm kind of rebroadcasting Stan's screen. So you'd probably have to look over on YouTube. But we have high liquidity up at the top at your kind of 48.95 or 96 or 97, something like that, where you have your kind of downward trend there. And then you have high liquidity again, and then you have a really nice confluence up there. It's just right above POC though, that's the only kind of, I just see additional risk there. Once it exhausts and we start to get some sellers, but the sellers really don't come in until much further down, then you do get the pullback, and you have a couple of red lines in there that you had kind of channeled there, and then maybe there's potential less risk down there, but just some thoughts, because you're already outside now, and you know the sellers have driven it away from the center.
Yeah, good points. And I don't think I included candlestick chart in addition to that, but I do rely on a mixture of, say, a 1 minute chart and some tick charts, and even like a 15-second chart to sort of put all the pieces together. So I think I was looking at that, at the candlestick chart and just seeing, lines of resistance and failure. Buyers couldn't take it higher. So I don't think it's...
Those are all great things. I mean, those are great.
Yeah. For me, I didn't include it to kind of give a whole picture within this slide, but yeah, I'm pretty much just going back and forth with my eyes between the candlesticks and bookmap, just trying to read it, trying to feel it, and execute.
Yeah. No, that's great. I mean, you're getting a feel for it. I also like you said that, that low volume node, it fell below it, and then comes back up and retests there. And now that could be the potential for an entry short if you start to see something maybe in the order flow. Stan had said like maybe more on the offer at a lower level, and there is some in there. You didn't really mention it, but I just wanted to mention that low volume node. Well, if look at the end of on the left hand side, kind of in the middle of your chart there, it is a low volume node because of the lack of volume down there, right? So just for those that want to kind of understand maybe price action and volume profile and why these things kind of exist like that, I mean, here it is. Like, that's why you got the move through it, back, retest back to it, and then you got continuation on lower.
Yes, that it's sometimes hard to take all these pieces and put them together very quickly, but after analyzing these charts and all the other great traders, it makes it clearer, because I'm learning from them and learning from all the webcasts, and slowly getting it.
No, that's great. It's great to hear, and that's what we're here for. Or that's what the Academy is all about, to learn from each other, provide this, and then continue to just looking at your charts, and then you find something that resonates with you, and then you take it further.
Yeah. No, I appreciate all the coaching. Yeah, all the work you guys do. It's very much appreciated.
Okay, great. Stan, I don't if you had any more questions or slow down. I don't know if you have any comments.
No, for me that's perfect. That's a great job. I would
Okay.
just suggest you to highlight more your relative volume to give you more confidence to decide of where to go. Like, you know, trying to recognize like the shift of the behavior.
Yeah.
But yeah,
Yeah.
great one.
Yeah. Okay. And I don't. You have I think another one, Stan. Got another
Yeah.
couple. Oh boy. All right.
So we have Vinny. So Vinny 5. Sorry for the resolution. I don't know why it appears like that. But still, it will be maybe appreciated to have a higher time frame picture to understand the context. But still, that's great by recognizing like your DO theory, making lower lows. Uh, yeah, your liquidity that come in where I think you short, not sure. And it's there, then I would maybe try to highlight again what's happening in your thoughts, like the conviction of one side of the other, like how strong was it here and how sellers come back and where you take an advantage plus the liquidity that can give you this edge. But still, then, yeah, you were looking to your VPI spike plus your CVD. I don't know if it's how it works, and getting lower. So yeah, overall, you took a great one. Yeah, but still same, trying to highlight more what is happening in your relative volume, like how it shifts and the strongness of your move. Plus, as you did, clearly highlight the liquidity. And I think it can clearly give you confidence in your trade.
Yeah. Very concise, Stan. I don't have any comments off of that. I mean, you just very consistent and concise. Vinny, I don't know if you have any questions. I don't know if you're in here.
Hi, Bruce. This is Benny. How are you?
Hey, Vinny, welcome.
Thank you.
Do
Glad to be here.
excellent, excellent. Do you have anything you'd like to comment on, or any questions to Stan?
No, I don't at the moment. I did make a couple of posts in the room. I don't know if you want to mention, if you want me to briefly talk about that real quick.
Let's just on this image here. I think, and yeah,
Oh, I
it
see
would
it.
be
I see it. I'm
better.
sorry.
Yeah, better for everybody else. I mean, we try to just highlight a few and then move on.
Oh, sure.
For the
Okay.
academy, if you have other comments, then you can just go through chat in the academy rooms.
Okay. No, I'm good. My post there shows everything. Yeah, you can see the book flip and the VPI CVD is awesome. And yeah, so it was a really nice short. And sorry I didn't go ahead and extend the target down further. But yeah, just to go back, it's a lower high. You had your book flip, and then you had a nice front runner over there as well to give it even greater conviction. And yeah, so it's a combination of a lower high, the front runner, and the VPI CVD signal, and we had a target for
Yeah.
lower.
Yeah, yeah, really, really good. I mean, very concise. I mean, what you had marked up here and what Stan had said. So, um, uh, you're already starting to focus on the elements that work for you.
Well, thank you, that's very kind of you.
Yeah, yeah. All right. So Stan, I think we can we'll move on. Maybe I think you've got a couple more, right? Thanks, Vinny.
Yeah, one more. Thanks. Great job. And so yeah, the last one is donkey face. So yeah, you are posting a lot. You're making great job as others. So yeah, that's great, and you're making some annotation for today and what you are waiting for. Your setup checklist, and then yeah, all your annotations are great. So he was looking first for enthusiasm. I think then it was this move. Not sure if I understand. Then it would be good to see more like your exhaustion on the chart. I think you were looking at it more on the sub chart, as I can see here. So with your market pulse plus CVD, not sure. Yeah, so for the failure, I don't know properly how you made it actually, but overall, I don't know if your level was the liquidity. It would be good to give us like more precision about it, but you know what you're looking for. And then yeah, where you entered in the market, where you would take your targets, 50% of the candle, as you said, and bias came back and you took your profit here overall. You took a nice profit. But I don't know if you're there to
Yep.
have maybe more
Can you hear me?
information.
I didn't. Can everybody hear me?
Yes.
Yeah, perfect. I hear you.
Okay, good. I apologize for the congestion. I'm fighting a little cold here. Yeah. So I think the specific questions were, how am I defining enthusiasm I'm not even allowed to look for this little counter trend scalp until there's been at least a 25-point move, directional move. That kind of sets up the theme for me to even start to look for this. On the ES, it's at least 10 points. On the NASDAQ, it's 25 or more. And then you asked about level. I'm using the heat map as one way to come up with levels, but in general, I'm setting my levels off of open, high, low, and close. Just very basic, manually dropped levels on where I'm noticing consolidation. And I do a lot of wave symmetry. So I'll have, if you take that wave, for example, where from the bottom left, the very first push up, that would be one wave. And then the next wave would be the top of the candle right in the middle. So those two waves, once I've had those two waves play out, I'm looking for some sort of exhaustion on a third wave. And you can kind of see how it
Then
stalled.
Your subshot.
Yeah, and I'm relying. I never thought I would use the subchart as much as I am using it, but I'm using that to qualify all of my somewhat discretionary ideas on exhaustion, failure, and strength of things. What I've noticed is that it on choppier days, on inside daily candle type days, you can almost just trade every round trip that it makes from the bottom to the top or from the top to the bottom. On trend days, I've found that it gets me into trades that are really difficult to manage. Not much follow through, obviously, because I'm more of a counter trend kind of guy. And if I get caught on a giant trend day, like yesterday, there was a trend up and a trend down. This setup has to be managed so precisely, which it's easy to get in with the subchart, but then you have to be really tempered on your expectations on the exit, which you can see I did here. I'm pretty good at that. So the levels coming from the heat map, from psychological levels, even numbers, 50s, 100s, that sort of thing, and then from targets and wave symmetry that I'm manually measuring. Yeah, so I don't know if there's any other questions there. Again, sorry for the congestion here.
No, that's great. That's great. But yeah, trying to maybe take advantage of your relative volume, like for your enthusiasm,
Mhm.
and really with your exhaustion, how sellers like are coming back.
Mhm.
Plus, like yeah, you can clearly see like how green was it here, and how sellers are trying to coming back. And but overall, yeah, that was a good take profit.
Yeah, I've it's some of it feels lucky half the time when I'm taking profit, but um in general, if I see some sort of extreme like the price change or the delta on the subchart and just discretionarily watching price, I'm not going to give it much of a chance. I feel like the skill that I've developed here is, and the Nasdaq, which crash had me uh, give that a shot several months ago, or I guess about 2 months ago now. I never used the limit orders on the ES, and I'm only using limit orders on Nasdaq. I feel like it whips around enough to grab me on my moves at prices that it sometimes it's 7 to 8 points above where I want to click the button. Because if on this trade's a very good example. So I'm waiting for that stall at the top and then some push away from that. And that first push down on the ES, I feel like you can just mark it in and you won't necessarily take much heat. But if you just mark it in on the NASDAQ, somebody's making money off of you, I think, because it will instantly go against you. So I'm dropping, the second I want to mark it in, I'm dropping a limit order in between 5 and 8 points above where I want to press the button. And then, I'll bite my nails a little bit and see if I get filled. And what I'm noticing is that very often the subchart will show its hand first, either with CVD rolling over or getting a lower high on price change or delta percentage. And once that grabs you in, I'm just waiting for the other extreme to get out. Often my exits are discretionary. I'm just clicking out, clicking the flatten button or dragging a limit order pretty close to where I think it'll get filled. Yeah, I apologize for all the posts. I'm pretty active. This is all I do all day, every day.
Oh, that's
No, it's great. Don't apologize.
yeah.
Really appreciate you and the work you're doing. So thank you.
Yeah, I appreciate it. Bruce, somebody had mentioned actually, I don't know his name, but it's TR8 about the algo band and how to filter that out. I
Yeah,
dug around a little bit today to try to find how to do that. If you could explain how to get rid of that or why I need to get rid of that, that would be cool.
absolutely. So tomorrow I can show you if you want to come to the All Markets webinar at 10 a.m. East Coast time.
Okay.
Yeah, no problem. I was going to comment on that. You need it. It'll help you.
Yeah, I've found that I'm not using the, when I see you talk through some examples, it's like you're seeing behind the curtain on the heat map, and I know I'm not utilizing that as well as I could. Because I'm seeing a lot of stuff on the heat map that looks interesting to me, and then price will react, and I'm late. I find that the subchart is a little ahead of price or synced up with price, and that the heat map is ahead of price.
Yeah,
When
yeah.
there's interesting changes on the heat map on the hard right, I feel like I'm not acting on something that's actionable. So that especially because I'm scalping it. If a trade takes longer than 5 minutes, I feel like I've made a mistake. And it's always funny to look at my charts after the day is over with, because a lot of my exits are great continuation entries. And if somebody would sneak in and press the the reverse button instead of the exit button, I might have some giant winners.
um, yeah, no, I totally agree. I mean, the Nasdaq's been like this for a while now. For several months, it's had this kind of these bands of algos on both sides, but sometimes the ES does it, but it's been a pretty long period. The Nasdaq's been doing it, so we can clean it up. I'll show you tomorrow.
Yeah, that'd be great. And I wanted to say one more thing about this very specific setup, and this is the primary setup that I look for, mainly because I feel like it happens quick and it shows up all day. You can almost trade around any 5 or 10 minute candle on the Nasdaq, if the entries are precise. And the reason I developed this over the years is because I I got I lost. I used to trade off of stochastics and MACD and RSI, 10 or 15 years ago. Well, maybe not 15, at least 10 years ago. And I wouldn't take heats. Like, I just waited for everything to line up. I'd use buy stops and sell stops to enter. And man, the trade would almost all of the time. It seems like, of course, it would just go my way. And that's been my biggest uh, complaint over the last 2 years is I can't just mark it in and have it go my way anymore. And I couldn't figure out how to solve it. I was still having success. And with Bookmap, I was able to implement this strategy that I knew existed, but I didn't know how to do it. Um, you can almost, you can't blindly do this, but you could almost short the top of every green 5 minute bar and get at least 5 points almost blindly. I made a ruler. I posted up a chart a couple days ago. I made a ruler on Ninja Trader that would I could select 15 or 20 candles or however many candles I want, and it will tell you how much each candle was overlapped. And the stats from that, no matter which time frame I pick, are that somewhere between 70 and 80% of every single candle is overlapped by the next candle 50 to 70%. And I think there's edge there if you can have precise entries like this.
Yeah,
So,
yeah.
there's my rant on the idea. And I couldn't do it without Bookmap. I tried, I couldn't.
I see, because we're not showing aggregated data. Like it's best streaming, best bid and offer.
Right.
Right, right. And then you got the volume within that as well, and the heat map within that. Yeah, no, makes sense, and a worthy study moving forward now, since you know that data.
Hmm.
Yeah.
Well, again, I appreciate your time, and these things are always great. I didn't know I could chime in on my phone, so this is pretty cool.
Excellent, excellent. All right. Well, thank you very much.
Yeah, you're welcome.
You're doing.
Okay. Bye bye.
All
All
right.
right.
So thank you, everyone. I will stop streaming now.
Okay. Yeah. Thank you,
Yeah.
Stan.
Wow, later.
Yeah.
I'll
Yeah.
see you.
Great stuff. Thank you, Stan. Let's see. So let's see. I'll be up next, and then we'll have slowdown in a bit. Okay. All right, can you guys see my screen? Yeah, looks like it. Okay.
Yeah.
Okay. Okay. So slow down or stand any time you guys want to jump in. Just blurt it out. And we'll go over anything that you want to comment on. So I got a long list here, and I got Crash, I got Alan or Trader Dude, JZ, JYF, Shark Blue, and Rob. I just wanted to. Crash has been doing some really great stuff, just like Donkey Face was just mentioning. And this one kind of just, I mean, he's going over lots of stuff. There's some comments on this. He's found something that really resonates with him, and he's taking it much deeper. So, his comment up here that just, it's something worthy to mention, is that, Market Pulse for him now has become such an integral part, an important piece for him, that he's expanded the subchart a bit. And made it taller here to see some of the details in what he's looking at. I have a few different comments on this, and well, anyway, let me continue on. He's looking at the volume pressure imbalance and the price change spikes, and then other indicators as well. So it can be kind of confusing down there in that subchart, but. Anyway, he's looking at the main chart at some of these things in here with the liquidity, the relative volume, and the price structure. But then the subchart is where he's getting his confluences. So he sees a spike, and I'll turn it over to you, Crash, and let you discuss it. But he sees the spikes. And then he's looking at that subchart and he's looking at his confluences. If you guys, whatever that you come across is working for you, and do whatever you need to make it better. This is working here really well for Crash, and I just wanted to note that. Let me turn the mic on also for Crash. Oh, there you are. I don't know if you have any comments, Crash.
Hey, thanks, Bruce. Good afternoon, everybody. I'm a little bit like Donkey. I'm losing my voice from being just a little under the weather, so please forgive my voice. I mean, you said it perfectly, and I'll just reinforce it. It is such an amazing tool to me, and Donkey and I have had several conversations offline about using this. It really is a game changer. So what I do is I use other charts too to help kind of find some of the levels that I want and do some of my drawing, excuse me, on those other charts because it helps me whether I'm doing a fib or a larger time frame. But then what I do is when I go in to get the specific entry or to go make the entry into the trade, long or short, I use the market pulse subchart there for the specific entry point. Because you can see sometimes, like a little double bottom in the CVD and the VPI spike. And once you kind of learn, depending on the situation, whether it's a pure reversal, whether it's a continuation in the direction of the trade, in the trend, and you're just doing a pullback move, or whether it's a low liquidity, just kind of a consolidation point in time, that they all have a little bit of a different look on the subchart. And as you start to put the different scenarios together, the subchart will tell, part B of the story. The A is the upper chart where you get the sweeps, the stops, the ice, the liquidity zones. But it's almost like using, some people I'm sure have traded off of ticks, right? When you try to get into a specific entry, a lot of people will do a specific like low tick to get into a long. This is almost kind of the same concept. But I think better and easier to identify than just using a tick chart, an NYSE tick chart. So it's fantastic. If you're not seeing what some of us are talking about in the bookmap room when we're posting charts, you're not seeing quite what we're saying, then I would say expand your sub chart to see what we're talking about. And if it's a little bit bigger, then it's a little more of a magnet for your eyes and you can pick it up a little easier. When it's all scrunched down into a 1 centimeter block down at the bottom of your chart, on a 32-inch screen, you might not see it as well. So depending on your screen, depending on how many screens you have, what other stuff you have, I just highly recommend opening up that bottom chart and seeing the picture, and then zoom in and zoom out on Bookmap itself, because you will see that the CVD lines, the VPI spikes, the price change spikes, they do change a little bit, whether you're looking at a 15-minute period, a 5-minute period, or maybe like a 2-minute period. And it really helps you identify that specific entry. You can zoom in and zoom out a little bit and just get that clear picture. So that's just kind of how I use the subchart in addition to the main chart.
Excellent. I don't have any other comments on that. It's working great for you, and now you're just refining, basically.
Yeah, fantastic. And just Donkey already said it, right? He wasn't using anything else, but just a regular chart. Then he went to using Bookmap, and now all of a sudden he's discovered the subchart as well. And look at the last 2 months of charting that he's been showing in there, showing stuff specific to the subchart as well. So there's a lot of people that are having success with it. I got to say that it seems like there's some people who are trading in the room and they're still having a hard time kind of seeing maybe where to get in and to get into trades, to get out of trades. They have an idea of maybe kind of the trend from a macro point of view, but then when it comes to pulling the trigger, they're really nervous, not too sure of where to do it. And I think if you add a couple things, like add the VPI at a minimum, I think you need to add the VPI. If having a price change on there is too much for you, in addition to the VPI, because look, it does look like it's some scrambled lines, but like I made my price change chart, the black line. So when I see a spike off the black line, I know that's price change down in the subchart. The white line is the VPI line. So when I see a green or a red spike off the white line, I know that's the VPI. If I see, for example, at the bottom, in that case you're looking at there, or that point in time right there, if I see a white line with a red VPI spike and a black line with a red spike, I've got code join, CVD, price change, and VPI all in the same location. So listen, trades, if you're not pulling the trigger, trade smaller. 1 micro, 2 micros, 3 micros, leg in. If you don't want to do it off the spike on top of a liquidity zone, fine. Find the W there, the consolidation part. Once it breaks out of that W consolidation, where I always say I'm adding, actually, because I am actually legging in on the bottom, and then I add on the breakout of whatever kind of consolidation pattern is, whether it's a Wyckoff spring or whether it's just a simple W formation, whether it's a double bottom. There's a lot of different ways to look at it depending on how much zooming out you're doing on the volume dots. But go into Sim and take the time to train your eyes to use the Market Pulse tool to leg into trades. And then I think what you will find is that your confidence will grow, and so will your pocketbook.
Yeah. No, you cover a few different things, really, really valid here. Number one is this is something to training your eye and back testing this. I mean, you can come up with like 10 or 5 examples right here, just back testing this. Just like, look down here, or here, right? Look down here, here. Where are you getting these extreme readings? It is so simple to back test this, and to give you confidence. Like you said, if you're getting hesitant to pull the trigger, just go through enough examples in here and put the pieces together, though. That's what you've done with the CVD, and you got icebergs in here, and you got stops, and then what was the black line again?
Yeah, I just changed the color on the price change line so I could differentiate
Okay,
it from the VPI line,
right.
because I think default wise they're both white. So at first I was having a hard time seeing the difference between the VPI line and the price change line. So I just made the black the color for price change and kept white for VPI.
Yeah, yeah, got you. So
So I mean, just look at that example you gave right there, right at 11:35 at the top, and basically 11:38 down at the bottom, right? Right there, you have CVD adjoined with a price change spike on the at the 11:35 spot. You have CVD adjoined with VPI adjoined with price change. Boom, leg into a short. How many points is that? 17,590 down to 557 roughly, right? Can you get 10 points out of that move? 5 points out of that move? Now you go down to that next one where the low spike is, right? You have CVD adjoined with price change and with VPI. Okay, so now you're down at 557 area, and it goes, kind of legs, zigzags back up, but it's all a series of higher lows all the way back up to 582. Can you get 5 points out of that? Sure. I'm telling you right now, you adjoin those three things: VPI, price change, and the CVD, and you put in a stop of 10 points max on 2 micros. You're going to be making $100 here, $100 there. 5 of those trades, you got $500 in a day. How many trades do you see on that chart right there in an hour period? I mean, we just talked about 2 of them.
yeah, yeah,
Happens
exactly.
all day long. All day long.
Yeah, exactly. And also, I think the key here of what you mentioned about pulling that trigger, because it looks horrible. It's like, oh my God, look at all this weakness and coming in, and you're buying. However, you just said you're trading too big. If you don't feel comfortable, and you've back tested this and you don't feel comfortable, just trade smaller, and then see how it works for you. So that's probably, I imagine, and it would be great to hear from you. I imagine that's what you did originally, and then you started getting, like, probably, on some of them you get annihilated, like it would just continue on down. But then you started to put in other confluences. Then now
Absolutely.
now you have a strategy.
Absolutely. You've heard me before, right? Every time I speak, I talk about confluences. So I'm always looking for. I mean, I have 3 confluences right here on one chart on the subchart, right? Three things on the main chart. I have sweeps, sell sweeps into sell stops, or buy sweeps into buy stops in a liquidity zone. So I have 3 things up top, 3 things down bottom. And then on top of that, I'm always looking for a moving average, a Fibonacci, a VWAP, a VPOC, something else to add confluence to what I'm doing. But just alone on Bookmap, I have the laundry list of confluences, at least 3 items on the main chart, at least 2 or 3 on the bottom chart. When you see this stuff on top of the liquidity zone, now you got to also remember, I'm looking at the ES side by side with the NQ. So I also see the liquidity zones on the ES at the same time that I'm looking for an entry on the NQ. So I do not trade the NQ blind because I want that added confluence of the liquidity zone to be shown better on the ES. But if I got a big band on the ES and I don't have a big band on the NQ, but I'm coming down and I've got those 3 confluences, the sell sweeps, sell stops, sell volume into a big thick liquidity zone on the ES, and then I've got the VPI, PCI, and CVD adjoined at the bottom down there on the NQ. I've told you before, yes, I am going to leg into that trade. Now let's just say you don't feel comfortable with legging in. Okay, you draw a box at the consolidation point right there at that 11, 38 level. And where is the W breakout formation? This is going to be really easy for people. Just draw a consolidate. Right in that zone. But up there on the volume dots, Bruce, take that box away.
This one
and
here?
just draw a consolidation rectangle there, right? Below on the left side as it comes down and makes it, right? Yeah, draw right there. Now bring your box down. Well, you can leave it right there. That's fine. Okay, so you break out of that box right there.
Oh, you mean this?
Up in the
Maybe
top,
maybe
the
this
green
one.
top.
This one here.
Yeah, that's where I would do it because I use the middle of the W.
Okay.
So that big dot on the right-hand corner of the smaller box that you have, to
Oh.
me, that's where you're breaking out, right?
Yeah.
Right there.
Yeah.
Then when you bounce up and you come down and you retest that red dot that's at the same level of the green dot, you know you're golden because all it's doing is back testing a previous spot, at which case you can go long. So now let's just say you entered there, you don't enter at the VPI spike. That price is somewhere around 570 and goes up to the next VPI and price change spike there at 1140. Where is that up there at the top? I can't read that on the slide.
Where,
Go to that
where
next
again?
big volume bar. Yeah, go up to the green dots right up there, where the highest green dots are. Right there. Nope. Further to the right. Further to the right. Keep going to the right. There you go. Okay, what's that price right there?
17,580.
Okay, so you got in your yellow line down there
82.
after it broke out, right? How many points is that? So if you went from breakout to PCI VPI spike at the top.
So down to 66.
Yeah, 66 up to where you get the VPI spike at the top of that column there to 82. I mean, 66, 76.
Yeah.
Right?
Yeah. So around 16 points or so.
Yeah. So how many points do you need per trade? A lot of people say they just want to do these little snipes and take the money and run. Okay. Take 5 points out of that entire distance over an 8-minute window, 10-minute window, and you got a couple $100 probably. So again, I just employ people to really study this stuff, back test it themselves, and prove me wrong. At this point, I'm ready to tell people prove me wrong, because every day I'm doing 3, 4, 5 charts showing the same thing every single day. So test the waters for yourselves. Go from VPI spike to VPI spike with a join CVD. And then if you have the ability to do it, add in the PC on top of it, plus all the other just normal order flow analysis that you would do on a chart. Is it mean reverting back to VPOC or VWAP or another liquidity zone or whatever? But in this particular case, you don't have great liquidity zones, right, on this particular chart. But just going off of VPI spike to VPI spike, right there, you got 16 points with very little heat at the entry point. It's golden.
Yeah, I agree. I mean, like, I was gonna just say, like, and I didn't know how to word it quite right, about being so indicator based, but prove you wrong, and I can't. It's just like, look at the order flow, look at the the liquidity, look at the relative volume. There are these things in there for sure. But if it's a systematic or a strategy that you are using that is working and is in a lot of indicators, it does not matter. Go for it. Take it further. Get really, really good at it. So whatever works. Nicely said, Crash.
Yeah, I don't want to take much time, but I'm just saying, listen, if you really want to make money and your system's not working, maybe your system's working and you don't want to change, then that's great. If it's not working or you want it to work just a little bit better, then try it. You might like it.
Yeah.
You know what I'm saying? And again, test the waters out, prove it over, test it for a week or two, and build your own case scenario. But I see guys posting charts all the time, and they're saying, "Hey, I don't know what to do," but they don't have a VPI indication or a CVD indication on the bottom of their chart. Well, okay, well maybe add it and see if it helps you.
Yep. Yep. Nicely said. Let's move on. Thank you, Crash. And let's see, who else do I got here? That was just the first one, so sorry guys. Let's get to, and that was supposed to be, I wanted to go through just quickly that it's something that had caught my eye. Alan, I don't know if you're in here or not, but new guy, so I just wanted to cover in here. So he's looking for, in Meta, he's trading stock, looking for CVD and VPI as well, high liquidity zone, sweeps and absorption. He's got his higher time frame. He's got his Camarilla, floor trader pivots, etc. So here's his higher time frame here, right? And he's looking at this move down into his. Also, he's got an SMA, and he's got a few confluences. Okay, and this is a pretty strong move down too. So based off of that, though, he's looking at Bookmap, and this is really nice. It's really nice to see someone new that is understanding like how to use this here. It's trading into very, very high liquidity, and then a little bit of follow through here to the downside, but you start to see the buyers start to come in. He's noticing the VPI down here, and then looking for it to float back up into the kind of VWAP here, or other structural areas here. So again, confluences along with order flow, a higher time frame confluences and order flow, and now he's also using some of the other indicators as well, just like Crash. Great stuff. That's it. It doesn't have to be that advanced. Just you need to have confidence in it, and do it again and again and again. God, there's our case study. Just look at what Crash has done, right? And now he's just getting really good at it, and making it better. So anyway, JZ, let's go over something that you had mentioned here, and just you're definitely improving and cobbling together the thing that works for you. I believe that we didn't cover this image last time. I think it's 118. Okay, so we may have, but it's just good stuff. Like you've got the move down in here, sellers drying up. Look at the volume down in here, and then you're getting involved into the trade here. Oh, that was another question for Crash, and just wanted to mention, Crash, you may want to start setting your orders in Bookmap. You'll probably see a lot more flexibility there since you can trade right off the chart, and you might move them around, and then you can also look at all your order history in here, so you can move them around, etc. Hit flatten, whatever you want to do, and it might be a little less cumbersome than trading off of something else, but just something to consider. So a little early in here, JZ, and then also a little early on the take profit, because it's a nice move down. You do see the volume drying up. This, though, is where you're starting to see the volume come in. You're seeing the flip here, at least in the volume, from sellers to buyers. And when you do see those things, you might want to hold it until the top of the range, or back to your POC here. Something to consider. All right, so the higher time frame in here, you've got it on the chart below here, but also here it looks like bouncing off of this area where these buyers came in and moved this higher. So you've got a bunch of confluences in here. Therefore, this move here, there's some more likelihood of getting a move like this back, right? And don't get out. I mean, you had to go through the kind of the pain in here and the risk in here that this might go against you. In fact, I agree with you. You're in a little early, and not too many volume dots here on the buy side whatsoever. It really doesn't happen until here. In fact, you can reverse this. Instead of this being your take profit, that could be your entry, and then this could be your take profit up here, something like that. Because once you got the buyers starting to stream back in and the order flow starting to change, you've got something. You got this kind of little distribution, and then you got your little trend or markup period here back to V or a point of control, right? So a nice one there, and you got a lot of elements in here. Continue on. I mean, you're getting something like, and that's what I wanted to cover. JZ, I'm going to hold off. Sorry, we don't have too much time. I did want to open it up for JYF Trader. He's in here, so if he wanted to speak, I think he's still in here. I don't know if we lost him or not. Oh, no, there he is. I watched your video too. So he posted here on Twitter, and I'll put the link in here for you guys in the chat so that you can see it. But he had a video in here. And it's yeah.
This is actually
You might want to take a look at it. It's just a minute, and this is it's fine to do like a minute video or something like a YouTube short. We can cover that. If it's like 25 minutes long, it's gonna be kind of hard for us to kind of go through. But he's walking himself through a trade in here, and it's great. So he's just kind of saying, well, I saw this and this. Now, he's in replay mode here. Okay? So he's reviewing end of the day here, or, another time after the market is closed, and after he's recorded his data. And he's starting to walk himself through and narrate the move back to your point of control here, and then also the move back to where it broke out from, and just starting to understand it and through the narrative here. It's a great way, and then go through it again and again and again, maybe 2 or 3 times at least, and that's where you can really I think hone your strategies and get a lot better. So nice one on that. And then again, he did it here with text though. I think at the point that he's at right now is what it looks like to me is here's his narrative. He's putting in the effort, noticing these points. This is fantastic because there's a lot of good stuff in here. And then what's going to happen here is the next step after identifying these things and starting to understand the relationship or the context in here, you will find something that works for you, and you'll see it again, and you're like, aha, this is where I have seen it enough times, and now I'm studying it, that I can start to look for a setup in here. You'll focus you won't have like 14 different points or 16 points to go into detail in here. You'll have like maybe 5, and the next step after that is you'll be just detailing your own strategy, and then that's it. So JYF, let's open the mic for you. And do you have any feedback or any comments or anything you wanted to mention?
Yeah, I mean, I was just trying to get the gist of what to do and what to submit and how to create something. Right now, I mean, I've been following Tom in the Trader Lab and trying to basically understand his strategy and how to incorporate the order flow and into what he's doing, and just basically trying to develop something there that I can do. Most of the stuff that I look at when I'm labeling, or I'm just kind of trying to get the gist of, I'm always looking at basically different ways that I can enter in, but I'm always calculating out risk reward out of every single entry, or where I would get involved. And like the video that I did the other day, that was kind of more of an experiment, and I'll probably do more of that because I realized that there's a better flow to it than actually some of the charts that I've done up. But that's one of the things that I like to see is the the ability to go in and to basically I'll just have my stops right on the other side of VPOC or something like that, or maybe basically being able to work with VWAP and certain different levels there. But and then on top of that, I mean, I've come through, I've tried to experiment with market pulse as well, to see different time frame alignments as well. I've been messing around with actually a lot of different alignments to see depending on what sort of range that the that the ES is moving, you can actually flip through different time frames. I mean, I'll use anywhere from just the standard 5 minutes all the way up to 2 hours, and I've been able to see certain alignments actually happening with it, at depending on the move. Now, I haven't been able to really back test to the point where I'd be able to incorporate it regularly, but I think that there's definitely a pattern there that will be able to be incorporated in the future.
Yeah, great. I mean, you're on the path basically. So keep going.
Yeah, I absolutely appreciate it.
Yeah. No, thank you. So let's move on. And I got Shark Blue and Rob. Shark Blue, we've covered you the last several times, I think. So I'm gonna kind of keep the mic off on you. It just another thing I wanted to mention though in here is this is your setup. You've gone over it and you've been covering it again and again and again. This is what resonates with you. So I do have some comments on what might help you with your setup. So the let's see, look for volume potentially trading away from your area. Okay, so because you have your POC here, and I don't know what was on the other side here, but you've got your POC, and look at this little kind of stair-stepping potential spoof in here. And then you have some really nice things in here actually for this move to unfold. It comes down to high liquidity and comes immediately back to test where it came from, because this is a value area. This is why it can be kind of tricky with the trading away from POC. But on your examples, you keep showing, it's above POC here, but look at the buying, look at the exhaustion here, look at the selling in here. There's very little buying, selling's picking up, and then they just whoosh right through that area down to high liquidity in here, but it trades right back to it. And it's possible, there's risks, there's always risks, but it's possible a lot of buying could come in up here, right? And these are some of the risks. But in terms of trading away in here, it didn't go back up above it really. It just traded to it. You got your VWAP as well. And then I don't see a lot of selling really coming in until a little bit later in here, and a little bit of back and forth in here, and then finally sellers take it down. And we get a test all the way back up again. It's still kind of fighting it, but sellers are still holding it to the downside here. And your target, you're noticing the absorption and also the sweeps in here. Great stuff. Just look, I would just suggest, I mean, this is your thing, so I would just suggest to look at more of the relative volume, pulling it away from those value areas. And there's a little bit of back and forth in here, and it still makes me just a little nervous. But once you're the one studying this is your setup. So you have some great examples here. So again, it's kind of like Crash. Prove you wrong, and else that's it. One more about scaling and taking profit on some of these things, like down in here. If the market gives you this much, and this is like an ATR of a move, I don't know what was beforehand, but you may consider, and it's hitting high liquidity in here, you may consider taking some off at that point if you got in it and you're moving away from it, which I could see a setup in here for this trading at POC, looking for it to move away because of the exhaustion here and the selling in here, and this high liquidity in here, and yet buyers come streaming through. But on moves like this, just the market gives it to you, take it, and then you can consider even it's possible like you could consider looking for a move back to POC. I mean, you could scalp it back, and then again you can consider re-entering back up in here for the next leg lower. If you don't see follow through, I'd be looking for really kind of zoomed in here, looking for that exhaustion. Like Stan always says, lower liquidity on the offer in here, and then that lack of buying and more selling coming in, which we don't really get until a little bit lower in here. But good stuff. Continue on with your setup and just get better and better. Right. So just some suggestions for you on that. And then let me go over Rob and Rob also too. If you don't mind, I'll hold off on the mic because we got slowdown and we've already gone almost an hour and 20 minutes. So yeah, your elements in here, great high time frame. You're looking at higher time frame elements in here. Really good stuff. I like how you say, well, you say this is messy and you can't read it. So what? The market, I mean, it's not telling us anything in here. So we don't know what's going on in here, and just step back. It's like a barroom brawl. Let it unfold and then look for the victor afterwards and ride along with them. Anyway, some nice documentation in here about well, you don't document too much about the move into high liquidity down here on the bid, but you start to mention that all right, price is not able to go lower, won't go below the VPOC, and you see the buyers come in, and then you've got acceptance up in this area up in here, and then you start to see the buying really come in, and you notice also on the bid you see high liquidity on the offer, and it also flips on the bid too in these areas here, and you get a really nice pull away from this area. I mean, you're starting to kind of look at and slow down too reversal patterns. I mean, here it is in front of us, right? The components are in here in the order flow, right? This is your inverse head and shoulders. In fact, there's a couple of them. There's a shoulder, head, and a shoulder, or double shoulder on each one actually. And then there's a little one here, shoulder, head, shoulder, right? So there's a few, but what we're looking for is things to turn over. Right, so that's selling to turn into buying on the way back up. It's start to break structure, and you're noticing these things: absorption on the way down on the bid, a lack of selling, lower or higher low, higher highs starting to break out, and this looks really nice in here. I mean, really good for a move back up into somewhere like here. We covered this in the All Markets webinar the other day. Look for your measured moves in here though too, because a lot of times on some of these days you will get this move, and it will be up to the swing and a measured move, but you won't get a continuation. So manage your trade accordingly, and look for your kind of minimum ways to take some profits, and look for those higher probability moves is kind of what I'm saying. So let's see here. Wait for the victor and ride along with them. Yeah, absolutely. It's no, a trader once told me that one time too. It's just like I'm not getting involved in that. I'm gonna wait until the fighting's over, and I'm just gonna jump on the bandwagon in the parade and with the victory lap. And that's all he was looking for. Let them duke it out. Yeah, it always kind of stuck with me. Let's see. One more thing was a comment here that kind of caught my eye in the all markets room that you had mentioned in here. You had said, I don't have it, it was further up in the chat, but something about like, oh, I was just looking to, at this image to try to make some content from it. And I really wanted to highlight that please don't try to make content or feel forced or compelled to make content. That is not what we want in here. Instead, you make the content really for yourself first, and so that it helps you, and that's our goal. Now, you need to articulate it as well to others. That will also help you tremendously because you need to explain it. And the more that you spend time with it, and the more that you journal it and articulate exactly what you're looking for, the more that and deeper you will understand it. No question about it. So that's what you use it this way. And it's not just Rob here. This is for everybody, and that's why I wanted to mention it here. Yeah. Anyway, that's everything I've got. Let me turn it over to slow down here. Yeah, and I've got his presentation here.
Okay, good afternoon, everyone. All you sickos who are still here an hour and a half into the meeting. I'll try to make this, relatively efficient and try to fly through what I can. So, Bruce, you can hear me okay?
Yeah, you sound great.
Okay, so if you want to enlarge that image, I can kind of talk through what we got here. So what we've got is from BAP. I mean, perhaps it's BAP, but I'm going to go ahead and consider it BAP for a little bit of fun. So overall, I don't think it'd be a surprise to anybody to learn that I'm a big proponent of using or building a schematic to help kind of further understand how to execute a trade idea and how to make it repeatable. So I like that you've kind of adapted that flag pattern and trying to outline it the way you see fit. I made a couple small little notes about how I would kind of be interpreting this pattern. So we'll start with number one, and I'll just kind of fly through it. Draw the consolidation range. You've labeled it, but I find when you draw it, it gives you kind of a defined breakout point. So right there, Bruce, number one, the yellow rectangle, I've added to the chart. And one of the main reasons that's important is the impulse move, in my determination, and kind of based on the schematic above, it begins at the top of the consolidation range. Now, one thing I've noticed here is you've drawn the impulse move a little later in the chart. You've drawn it quite a bit longer in terms of its overall distance. So I'm guessing you measured the bottom of the consolidation range to the top of the first pullback. And I just don't think that that's going to give you as reliable of a measured move. Whereas if you measure from the top of the consolidation range to your initial pullback, use that as your measured move. You can see I put on number two a couple of red rectangles. That is the measured move the way I would look at it. So it's the top of the consolidation range to the pullback, and then just doubling that up. And you'll notice when you do go up to the top there, it aligns with that resting liquidity that you would kind of want to exit in front of. Another thing about this screenshot is number three. I believe, if I'm just guessing, that's probably like a market on close order or something. That huge volume bubble is kind of skewing your overall volume picture. The volume is really important in the flag pattern, especially the relative volume. And we don't really get any volume picture because everything's being absorbed by that one transaction. So the fact that the transaction's not actually a part of your trade review, it would be a lot more valuable to be zooming in and removing that from the site so that the relative volume isn't skewed and we can actually kind of learn a little bit more about what's going on in the picture. you'll notice at the bottom, like we don't see any like real volume bars, where I kind of have a number 4. So you can see like we're going to learn a lot more about what's going on here with a little bit of understanding where the volume is. Again, that's just using the real estate of a screenshot, to give us the most amount of information to work with. So what I did at the bottom is I kind of redrew the flag pattern how I see it, and that pretty much lines up. I again added the colored arrows on top of your drawing as well. But if you look at it in those terms, it does kind of play out exactly like your schematic, and it's just about where you start to where you define the beginning of the impulse, where you define the consolidation range. But again, what's really missing here is the volume picture. We can't tell from volume dots or volume bars at the bottom. So in order to really qualify this as a flag, we want to see the impulse up on high relative volume, the pullback on low relative volume, and then an immediate reaction from buyers again. We do see, liquidity supporting the bid on the pullback, which is great. But, volume is a huge part of this flag pattern. So, it's kind of hard to really know what's going on with the way this image is captured. You'll see your entry, your kind of trade management there, your entry and take profit. You really scalp in the move, which is, if that's what you want to do, that's fine. But based on how I've drawn it with the new colored arrows, you can see if you are going for a measured move, there is a little more meat on the bone. But, that's kind of also a bit of a hindsight analysis.
You mean this down here in terms of like measured move and entry, stop, and target?
Yeah, that's kind of the ideal, and that matches the schematic. Whereas if you look up directly above there, you can see with the yellow, orange, there's the actual trade is on the chart. It's just kind of hard to see. And so when you're working, like if you view the flag pattern a little more as I've drawn it, it can show you that the measured move does kind of align with front running that liquidity. And so it might give you a little more confidence to hold, for a slightly higher profit target.
Okay, I don't know if BAP is in here. I don't see him. But
yeah, no problem. I mean, it's all pretty basic. He's done a nice job identifying what he's looking for, and I'm just kind of helping reframe how another set of eyes might look at that exact same pattern.
Okay, great. So do you want to move on?
Yeah, let's fly.
Okay. All right, Caesar.
All right, Caesar. So overall, I think Caesar's making some good progress. You noted in your Discord post that you took a simple trade from level to level with great confirmation from Bookmap. Now, my recommendation based on your screenshot is let us know what you consider to be great confirmation. We're all going to see different things when we look at it, but we want to know what you're seeing when you're showcasing this content. What elements of the order flow do you consider to be important? So what I've done is just quickly added a few little numbers around the first things that come to mind when I see this chart. So your 5-minute candlestick shows the trade, and it worked out great. I just would like to see a little more elaboration on the great confirmation from Bookmap in your post. So I'll quickly fly through what I see. Number one, the buyers are interested, but they're not rewarded. You can see a large impulse of buying before we actually transact that liquidity. That's just something of interest. Once the large resting liquidity transacts on number 2, we see a lot of absorption from sellers. And number 3, liquidity is added to the bid after the transaction above. And the fact that it's added after, I find important. It helps build out a little bit more of the picture here. Number 4 quickly shows the delta switching to a lack of sellers after that large liquidity transaction. You'll notice before it, we got a lot more sell activity, and then after it kind of dries up. We don't see a huge push from buyers yet, but the fact that the sellers are drying up means there's a little bit more of a battle underway. Number 5, liquidity is added back to the bid at the exact same level as the previous large transaction. And that I consider to be pretty material. That's saying that people who were in the book, well, it could be anybody, but where we transacted at number 2 has been re-added back at number 5. And I often tend to notice that type of behavior when we're getting some type of a bounce or reversal. Number 6, you can see liquidity on the ask is being eaten up by the buyers. So like there is appetite for further buying. And then we see the support on the bid as well. You know, it's all pretty basic stuff. And then lastly, I always ask myself, you know, where do you think the market's going? Whether you want to participate all the way up to that level or not is up to you. But if you look at number 7, 398 on the price ladder, you see a pretty clear long-term resting liquidity, and it looks like we're starting to target right up towards that. So whether you want to like get involved and hold up towards that point is up to you, but I find it's always good to think to myself, where might we be going? And so yeah, that's just an example of some things I'd point out to kind of go along with what you consider to be great confirmation.
Yeah, let's open up the mic here. We've got Caesar in, so yep, you should be able to speak.
Yeah, can you guys hear me?
Yes. Yeah, take it away.
Yes, thanks so much for the feedback. I shared a link there to a chart that I posted in my review, and that chart actually has all my notation where we're seeing why I took the trade. I'm not sure why the one you have there doesn't have anything marked up. That's weird, but pretty much everything you said is along with what I was seeing, the market pulls, the CVD increasing, and the resting liquidity, the sellers drying up. But yeah, that's what I meant by the nice confirmation, the hold of the level.
Oh yeah, so I just clicked the link and I see, yeah, you do have annotations, and yeah, so I mean, there we go. We're all on the same page. I'm not sure why the one I, you know, tracked down didn't have any of your notes on it. But yeah, I mean, that was all the feedback I really had, was just, you know, give us a little more information as to what you consider, you know, great confirmation, and it looks like you've done that. So, you know, fantastic.
Thanks. Yeah, the main thing that gives me that confidence to hold is just the bid stepping up, and you know, no follow through at those levels. Like time and time again, there's always reactions at those levels, and big ones. Like I'm still holding to the next level. That was the first time I can honestly say held to my target, but perhaps helping me gain that confidence to hold.
Fantastic. Yeah, it's always easier said than done.
Yeah, absolutely. After it goes against you and you think, why did I do that? Let's see. Yeah, Caesar, any more comments that you have? Guess not.
No, I just want to thanks to Stolen and the whole Bookmap review.
Okay, great. Well, it's great having you in. I know you're rather new to the program too, so great stuff, and great improvement as well.
Thanks, Bruce.
All right, and let's see.
Yeah, we just got one final one. User account 01. So yeah, my feedback is pretty specific to user account. I don't think he's here. So I'm just going to kind of fire through this, you know, relatively quick, because it does apply across, you know, a broader scope. I'll start by repeating what I said last Academy session. You don't need to know what anyone else is doing in order to be successful in the market. It's clear that user account is looking at Bookmap differently than many of the other users in the Academy. That's totally fine. But I'd say for the purpose of the Academy, it'd be useful to get a little more explanation on how to interpret this chart for insight. Again, like, I'm not intending to be disparaging in any way. We all have a different approach, but I think many in the Discord would like to understand how you're interpreting the notes that you've made and like how to make decisions based on them. So number one, you've noted purple square equals market volume stop, market sell exhaustion. I mean, maybe it's just me. I read that sentence like 5 times in a row and still can't quite understand what that really means and what that could tell you. So maybe just like, I know you've drawn an arrow to it. You'll notice to the left of where your arrows are, we also see those same purple squares. But there is really, like, there's nothing that I can quite understand as to what insight that's going to give you. So even just like a sentence or like, you know, some kind of explanation, I think. I've noticed other users in the Discord asking you for a little more clarity as well. Again, everyone looks at it differently. We just kind of would like to know a little bit more about how you're making this actionable. So same thing, kind of number 2, you know, the green triangle liquidity added on the bid, but there seems to be an almost equal amount of liquidity added to the ask, according to the subchart and the on-chart indicators. So just kind of wondering again, like, you know, basically, like, how are you using these things that you're marking to make trade decisions? That's kind of it, you know, like it's all just the same. Number 3, hidden market buys. I'm assuming you're using that kind of like an iceberg, looking, you know, who's participating without wanting to show their hand. So maybe you're looking for, you know, stronger silent players there. But again, just 1 or 2 sentences to kind of explain a couple of these things would be really valuable, I think, for the rest of the community and somebody like myself trying to dissect this chart. And lastly, I guess I was going to ask you if your market buy and sell indicator in the subchart is divided into time segments. It looks at first glance like it resets every, you know, couple minutes. If that's the case, that's interesting, and I would just be curious how you chose the specific time increments that you're using. So again, we just want to know a little bit more about what you're doing, because you know, the charts look quite a bit different than most of the contents that's shared, and you know, I think we could all learn a little bit from what you're looking at. So it's kind of more, you know, asking for a little more detail in your explanation. Yeah. Aside from that, I'm not really sure, you know, what else I can really say about this chart.
Okay. So that's it then, I think, right? I don't think you've gone through.
Yeah, that's it. I mean, like, Bruce, do you have anything? Like, you know, I was kind of racking my brain on that last one, trying to make sense of that information. Like, is there anything you want to add about that image?
Yeah, a few things. I mean, well, first off, this is crypto, and I mean, it is chaotic in here, and yeah, I'm finding it very hard to read, and there's a lot of stuff going on in the subchart, and I don't. Maybe you've even written some programs in here. Yeah, potentially, or maybe you just have it set up in different configurations in here. Maybe yeah, you got your liquidity tracker, etc. So yeah, and you know, I mean, what I've found at least is, you know, a lot of the crypto guys just are kind of doing their own thing in a very, very different way. They've come to the markets in a different way. Crypto is very different. Even the kind of vernacular is different, saying the same things like in a different way in the crypto markets. So that's fine. That's the way it is. I just think you made a really good comment there, slow down, of like articulating it so we can learn from it. You can get better at it, and be more helpful for everybody. And mostly, I think it'll help you. Like I said, with Rob and others, I mean, this is an opportunity for you to articulate exactly what you're looking for, and if you can do that, you're going to get a lot better. So use it, use us, basically. That's all I wanted to add.
Perfect. Sounds good.
Okay. All right. Well, that's everything, guys. Sorry this went so long. They've been going so long, but it's so good to open the mic for people, and to hear what you guys have to say. This is why we continue to go for like an hour and a half or more, and even though we're not covering too much, it's just really good to open it up. And thanks everybody for all of your great content, and it's really great to see a lot of improvement here. So go continue on, and those guys that are they're making some great content, and they're getting close to being invited to the Bookmap Junior Academy, and they can bump it on up into the Bookmap Academy. So just continue on, and we're happy to do it. It's just we're not getting quite enough. So use the community and get better, and then also reduce your trading costs and get Bookmap for free. So I would just encourage you to continue. And that's all. Well, thanks everybody. Thanks Slowdown. Thanks Stan. Great stuff. I really appreciate all the coaching and the feedback. It's really good, and we've got a great community. So continue on, guys, and we will catch up with you next Thursday. All right.
Okay. Thanks, Bruce. Thanks, everybody.
Thank you. Bye bye.
All right. Good night. Bye bye.